What is going on, guys, and welcome back to another very exciting video. In this video, we're going to be talking about Palantir again because this stock is still on an absolute tear. So what we are going to go over in this video is we're going to talk about the opportunity in front of Palantir. I want to talk about valuation and where it could be headed over the next couple of years. And then we will leave off the video by taking a look at their stock-based compensation and what is going on with that and where I project that to go over the next couple of years as well. So if you enjoyed the video, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. Let's start off by taking a look at the stock chart. We can see here today the stock was down around 3.25%, but after hours it has gone on an absolute tear. When we compare the lows of the day to the highs after hours, we see that the stock has moved up over 14%, which is absolutely massive. Since then, it has given back a little bit of its gains, and we can see from the lows of the day to where it's trading at now, we've actually moved up around 9.5%. When we look at the last week, we can see that there's been a little bit of volatility. Overall, the stock is up 17%, which is absolutely massive. But here, Monday into Tuesday, we see a very large move up, and then the stock began to give back some of its gains and then continued giving back gains into Wednesday. But here after hours, we've seen it spike back up to around the $13 mark. Overall, year to date, Palantir is up almost 92%. And Palantir is showing growth in all of the right areas for investors. We have seen their customer base surge by 41% over the first quarter. That includes a 50% jump in their US commercial customers. And with all of that growth, we have seen their revenue grow as well. In the first quarter, they announced that their revenue grew by 18% year over year to $525 million. With that, their commercial sales also grew by 15% to $236 million, and their government revenue grew by 20% to $289 million. Personally, I think we will start to see these numbers flip. I think their government revenue will start coming down in terms of the increases year over year. I think we will see those numbers start being in the high single digits to low double digits. And I think their commercial sales is what we are really going to start to see expand. I think that could easily get anywhere from 20 to 30% growth here over the next 3 to 5 years. And we've already been able to see how Palantir can impact large businesses through their partnership with BP. BP has been able to slash their production costs by roughly 60% since partnering with Palantir. That is absolutely massive, not only for BP, but also for Palantir, because new potential customers see these partnerships and see the potential benefits that they are adding to these companies and think, hey, why don't I get in on this and potentially partner with Palantir to help my business as well? They have also partnered with companies like Hertz to help them operate their 500,000 vehicle fleet more efficiently. And these partnerships are not only helping the top line revenue numbers, they are also dripping down and affecting the bottom line numbers as well. Palantir posted an operating income of $4 million based off generally accepted accounting principles. And if you exclude stock-based compensation, they actually posted an operating income of around $125 million. And one important thing to keep in mind is ever since 2020, they have actually been decreasing their stock-based compensation. We can see in 2020, they offered around $1.3 billion in stock-based compensation. In 2021, the stock-based compensation was sitting around $0.78 billion. And then in 2022, that number was all the way down at $0.56 billion. And overall, as we see these stock-based compensation numbers continue to decline, we will see their operating income continue to increase. And you can see a similar trend when you look at their stock-based compensation. It had this huge expansion back in 2020 into 2021. And that's what we saw from, again, their stock-based compensation chart that we just looked at. But since then, it has really fallen off. And now they are in kind of single to low double-digit growth numbers. And really, a lot of these companies over time, when they're tech companies, they will really start pulling back on their stock-based compensation and the amount of shares that they have outstanding. When Palantir starts getting more income in, we could start seeing them buy back some of their shares, and that would actually cause this number either to level off or even potentially drop. I wanted to close out this video by talking about valuation. So right now on Yahoo Finance, we have 15 analysts covering this stock for 2023, and they have an average estimate of 21 cents. They have a low estimate of 20 cents and a high estimate of 25 cents in EPS for the year. When we look at 24, we can see that the analysts are predicting around 25 cents in EPS with a low estimate of 21 cents and a high estimate of 31 cents. In my opinion, these numbers are relatively fair for what is currently happening with Palantir. The one thing I think analysts could not have factored into these numbers is how AI will affect the business. I think AI for a business like Palantir, where it is about data, it is about companies making data-driven decisions, I think AI could have a massive impact on the business that could really help not only their top line numbers, but also their bottom line numbers. And honestly, when we look at these earnings numbers and find PE ratios for them, the PE ratios are really not that crazy. We have the low estimate for earnings around 20 cents for next year. We have 25 cents for average, and then we have 31 cents for the high number. And when we look at the corresponding PE ratios, for the low estimate, we're getting a PE ratio of around 65. For the average estimate, we're getting a PE ratio of around 52. And for the high estimate, we're getting a PE ratio of around 42. And really, for a growth company like Palantir, any PE ratio below a 60 is relatively a good thing. What I've read from reading Benjamin Graham as well as other research is that when you start getting to PE ratios that are above a 60, that is when it becomes difficult for companies to keep the growth numbers that they need to maintain that high of a valuation. So with all of that said, personally, I do like Palantir for the long term. I think they have a lot of growth in front of them. I think the commercial base is what is going to expand the business in a massive way. We're already seeing that with the partnerships that they have with BP and with Hertz. I think those two partnerships are going to lead to a lot more customers being introduced to Palantir and potentially adding them into their overall system for their data analytics. And that is going to have a huge impact on their top and bottom line numbers. But ultimately, what we need to see is their valuation continue to maintain kind of where it's at as they keep growing. I think one thing that a lot of these companies tend to happen is their valuations get a little bit out of hand. We see PE ratios start shooting up into the 70s, 80s, and even up into the hundreds. And I think when you start seeing that, that always scares me with a company because it's very, very difficult for them to maintain the growth that they need to maintain those high PE ratios. So keep in mind, that is all my opinion. Do not listen to some random guy on YouTube. Make sure you are buying companies that you believe in for the long term that meet your risk tolerance as well as your time horizon. But with all of that said, I hope you enjoyed the video. If you did, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. And as always, guys, have a wonderful rest of your day.